Hey everyone, we're back here at TradetechFX US in sunny Florida. I'm joined now by Manu Choudhary, who is CEO of DMALink and co-founder of DeFinity Markets. Manu, welcome. Thanks for taking the time to speak with us today.
No problem at all.
So, judging by the big banner behind us, I think you're one of the title sponsors of this event. Yeah?
Yes, absolutely, we are.
And you've been coming to this event for several years now, yeah?
Yeah, I've been 3 other times.
Perfect. Can you tell us some of the themes that you've overheard sort of in your discussions with clients, partners, colleagues so far?
Yeah, of course. I mean, look, I think one of the biggest themes is the evolution of the digital asset space. The route from TradFi to the digital asset space has also, I think, been very high in the agenda. And I guess for the more traditional assets, there's been a lot of scope and discussion around volatility, dealing with volatility, managing it, predicting it. So it's been a very interesting couple of days.
And if we talk a little bit about TradFi, as we call it, DMALink boasts, or you guys have, a anonymous liquidity engine, I believe, for emerging market effects.
That's correct.
And with all the geopolitical risks going on right now, market volatility, interest rate hikes, are you experiencing sort of a jump in demand for these types of services?
Yes, absolutely. I think when I first joined FX, probably 20 years ago, there was a saying that was an emerging market is one from which you can't emerge in a crisis. So we've spent a lot of time and effort going out sourcing local liquidity on both sides, and we've managed to get ourselves into a position where we do offer some very, very good pricing within the EM crosses. And look, certainly volatility is interesting, not necessarily good for those locations, but absolutely good for business. And we've seen a lot more interest in the EM space as well. And let's not forget, from a population perspective, we are going to see some of these regions begin to really dominate in the next 5 to 10 years.
And one of the things that I've asked other interviewees today is, do you think that the demand for emerging market FX, access to emerging market FX, is going to continue if we see essentially in the interest rates, the geopolitical risks subside? Or do you think that it will continue on based on sort of the market themes that are going on globally and also just in terms of investor demand?
So look, I think there's 2 dimensions to this. One, obviously, is those that are trading on a more speculative basis, and there are those that are investing. I think the speculative demand will die down as we see everything normalize. The demand from investors is going to grow exponentially because it is a very attractive part of the world.
And in terms of your order matching feature or engine, I believe it satisfies what we know as the global FX global code. I wanted to ask how that feature is going in terms of its popularity with clients, and sort of how is the adoption of the FX global code going, for you guys?
So it's gone a lot better than we expected. There is actually a huge amount of demand for this, and I think what's happened is people have realized that unless they attest to this and sign up to the global code, effectively you have a situation where you have really fractured liquidity by those that do attest to it and those that do not. Sure. So I think it's been quite a compelling force to push people in the right direction. And again, look, one of the founding tenets of the business is to have more open, more transparent, more accessible financial markets, and the global code ticks a lot of those boxes.
I know that you guys also partnered with an AI firm, I think it's called Axion, recently, and that is to build a basically, an algorithmic system of sorts, or some sort of predictive technology for trading FX, yeah? Can you tell us a little bit more about that project and its features?
Yeah, sure. So look, we partnered with Axion a little while ago. We have a wonderful relationship with them. They are probably the smartest people when it comes to artificial intelligence, and they were pioneers of developing some very novel technology. I was fortunate to have a very good relationship with them historically, and essentially we worked with them to build the actual AI engine that powers the anomaly detector for crypto and also for foreign exchange. And we're building the first generation of AI-powered algos. And fundamentally, the difference between regular algos and the ones that we're building is that a regular algo, essentially, when the dynamics of the market change, when there's a structural shift, they become less efficient. When you have an AI-powered algo, it adapts to the market. Sure. As the market changes, so do the parameters of the algo. And we think this is probably going to be a huge step forward for the algo industry, certainly within FX and also to a lesser extent within crypto.
Great. So DMALink, I think most of the industry is acquainted with DMALink and its services, but maybe not so much for DeFinity Markets and Circulus, which you are also involved in. Could you sort of tell our viewership a little bit more about these two projects?
Yeah, sure. So DeFinity Markets basically is a digital asset ECN, and effectively we have a very unusual way of intermediation of credit. Which I can't discuss too much because it's under strict NDA.
I was about to say, tell me more.
But we will disclose this as and when we can do. Sure. And then Circulus really, so one of the issues you have certainly with digital assets is it's a very immature market. There's no standardization of anything. And really what we wanted to try and replicate was to have, certainly from a infrastructure perspective, some degree of consistency, and also from a settlement perspective, i.e. cross-custodian settlement doesn't exist today, like it does in the PB world. So that's basically what Circulus is doing. But Circulus is a very, very important piece of the puzzle because it helps to remedy a lot of the headaches you have at the moment within digital assets.
One of the things that I've heard today was in terms of like the adoption of digital assets for investment firms. So basically the people that are in charge of managing whatever your money or corporate money or whatever it may be. Actually, I think Bain or one of the consulting firms just came out with a report saying that they foresee that maybe in the next 5 to 10 years, asset managers and companies like that will probably allocate, let's say, 1 to 5% of their portfolio, or maybe even more, to digital assets in the future. Will DeFinity Markets and Circulus be able to sort of facilitate this in the future, or assist in facilitating companies to do this?
Yeah, absolutely. So look, as I kind of mentioned, we have a very, very innovative solution. We are, I believe, the first in the world to do this, and it makes it much easier for TradFi businesses to access this in a safe, secure way. And essentially, this is a function of separating custody, be that of fiat, be that of digital assets, from trade execution, which I think is a very, very important thing right now.
And I also saw DeFinity Markets, you guys are working on an innovative credit solution for FIs to mitigate counterparty risk.
Yes, absolutely. No, we are. I can't talk about it too much, but no, absolutely we are. And it is going to be, I think, a bit of a game changer. And what it will essentially do is it will open the gates to a demographic of counterparties that have a huge amount of demand to trade crypto, but today are unable to, because they are not able to face unrated counterparties like exchanges, which we fully understand and would never suggest was a good idea.
Makes sense. So I think in November of last year in London, you had spoken at a conference and you had given some thoughts to CBDCs, which are also a hot topic these days. I would say probably maybe more so in Europe and Asian markets, maybe than in the United States right now. And it looks like Great Britain is sort of taking a leading role today, in the sense, because the HM Treasury and BOE have proposals and things like that, and they seem to be maybe one step closer in moving forward in terms of CBDCs. In general terms, and not to get into details, kind of what's your opinion on CBDCs in general?
So look, I guess there's two different types of CBDC. There's wholesale CBDC, which I'm a huge fan on. I think it's a wonderful idea. We worked on a couple of projects with central banks on the wholesale side of things. It definitely helps to remedy a series of quite problematic issues. So I'm a big fan of that. When it comes to retail, look, I think we have to be a little bit careful, because I think sometimes people get carried away with technology, and effectively we are finding solutions to problems that don't necessarily exist. So are retail CBDCs going to do anything radical? Well, I think in places like India, for instance, they would be phenomenal, absolutely phenomenal. But in the UK, where 96% of the adults already have a bank account, you don't really need it for additional financial inclusion. When I can make a faster payment in less than 30 minutes or a separate payment in less than 1 hour, it doesn't remedy the payment issue either. Europe is pretty advanced when it comes to banking infrastructure.
Sure, yeah.
What I think was probably a better idea is effectively to have commercial banks issue stable coins that are collateralized with assets held at the central bank, i.e. a synthetic CBDC. And effectively, which is what we're probably going to see in Europe in the next 6 months.
I see. Well, when I think of CBDCs personally, I think about the digitization of our lives, right? And I'm sure you've heard sort of predictions or things like that in terms of what we might see in the future, just from the global sort of financial system itself, and sort of our own personal lives in terms of how we transact with each other, how we transact with merchants. And one of the things that has been one of the points that has been raised, that if there is going to be increased digitization of our lives in terms of us relying less on, again, paper currency, whatever it may be, that might drive maybe not adoption, but sort of demand from just the general public to have what I think we would call it a retail CBDC. What do you think about that?
Okay, it depends on the currency. So if you look at the currency that is used most around the world, is the US dollar. Now, why do people choose the US dollar? A, because it's the biggest economy, but the real reason is because the US dollar has never been cancelled. So if you want to take an 1875 note that's worth $5, I mean, I wouldn't recommend it. It's probably worth a couple of thousand. You can still go and you can spend it to buy $5 of whatever you want.
You mean in terms of the tender itself? Yeah.
Exactly. Whereas Europe is notorious for doing so is the UK. And that's a real reason that I don't think we'll ever get rid of cash. Okay. Certainly for dollars, I know that they're pushing for it very hard in Europe. It may happen, but it will probably not happen in Germany. But I think, look, we have to be mindful of the benefits. And I think sometimes people get too carried away with technology, and the way I look at it is very simplistic. Does this benefit people? Does this really have additional value? And if the answer is no, then we probably shouldn't be doing it. I see. And I think it remedies some issues, but it doesn't remedy many issues.
Okay, makes sense. Manu, thank you so much for taking the time to speak with us. It's the first time we were able to speak with the representatives of DMALink and DeFinity Markets. Good luck the rest of the way at the show, and we hope to see you soon. Thank you.